Ladies and gentlemen, welcome to Kohler Group's Expansion into China webinar series. This is part 4 of 10 webinar sessions, all concerning issues surrounding foreign investment into the Chinese market, as well as expanding operational abilities within the Chinese market. Today's topic is in relation to China's value-added tax reform. The end is in sight. In March 2016, the State Administration of Taxation and the Ministry of Finance jointly issued Circular 36, the final step of the pilot program first issued in 2012. Circular 36 contains the value-added tax rates, the VAT rates and rules applicable to all industries. And thus far, what has not been affected by business tax is now being transitioned into VAT. The full implementation began on May 1st, 2016. In today's webinar, we will be looking at what value-added tax is, primarily for those people that are online today who are not yet in the Chinese market. There are definitely some differences of what VAT is in China compared to Europe and in other countries around the world. And we will then progress into what Circular 36 entails and what it means for companies that have limited entities in China as well as representative offices. But before we begin today's session, I would just like to check that the sound system is functioning. So if everybody could click on the hand button in the control panel, that will allow me to know that the sound system is functioning. If there are technical difficulties on my end, please don't exit the webinar. It will just take a few short seconds, up to 1 minute, for the sound system to return. It's usually because of the internet instability. If you are having difficulty or technical difficulties or audio difficulties on your side, please go to the audio section of your control panel and switch from your microphone and speakers to a telephone line. That will help you to get back into the webinar session. Now, the webinar today is quite lengthy, as the subject is quite difficult to explain in layman's terms and easily. But I do like to receive questions and comments from attendees. So if you do have any specific questions or comments in relation to your own business, please don't hesitate to insert it into the questions section of the control panel. And I will be answering you then directly at the end of the session. For those of you that are new to Kohler Group and who we are, allow me to introduce ourselves. Kohler Group is a CSC company. We provide a wide range of market entry services and post-incorporation services for companies that are looking to enter the 3 jurisdictions in Asia, primarily Hong Kong, Singapore, and China. We have 10 offices throughout these 3 jurisdictions and just over 120 professionals. We tailor-make our solutions for our clients depending on the business models that they have and what they want to create locally in the market. And one of our unique advantages is that we do speak several languages internally, allowing us to communicate with our clients directly. A little bit about myself. My name is Christina Kohler-Coluccia. I'm a director with Kohler Group. I've been with the firm since 2003 when I first opened our Shanghai office in China. Since then, I've expanded our China operations to having 8 offices throughout the Tier 1 and Tier 2 cities. I've been helping companies not only with their market entry into the Chinese market, but also their local expansion and, in some instances, their exit from the market. I've also been assisting companies lately with their expansion into the ASEAN region. At Kohler Group, we produce a wide range of resources that can all be found on our website. It's all complimentary. But if you're interested in getting weekly updates, it can be done so by simply inserting your email address into the ChinaInvest.biz information series section of our homepage, and you just have to put your email address and you will start receiving our e-newsletters. So without further ado, let's begin with today's topic. Now, any tax topic is a complicated topic. If you attended yesterday's webinar session on permanent establishment, that's quite a detailed topic and very case specific. And just like value-added tax, it is also very case specific. Now, VAT is a sales tax like you would have in Europe, like you would have in the US. It is a major source of tax revenue for the Chinese government. So any form of tax avoidance with VAT will cause you major problems in doing business in the Chinese market. Now, I want to emphasize this because I get a number of inquiries from newcomers coming into the Chinese market saying they want to sell products, they want to sell services, they want to attack the Chinese market, and they believe there's a market for them. But their first question is, how do we get rid of the VAT? Well, quite simply, you can't. VAT is there and it is there to stay. And no matter what transaction you are doing, you are going to have VAT imposed on you and you are going to have to declare VAT to the tax authorities. So let me explain to you a little bit about what VAT is in China. There are two types of VAT, which any company can register for. You have the general taxpayer status and the small scale general VAT taxpayer. The general taxpayer status basically means that you can reclaim or offset VAT on purchases, sales of goods and services. Generally, I would say maybe 70 to 80% of all companies in China have the general taxpayer status. Small scale general VAT taxpayer status is really for these mom and pop shops that are opening up that have minimal transactions that are running through the company, and they realize that they cannot offset the input VAT, but it doesn't matter because the number and quantity of transactions is so minimal. If the quantity of transactions are minimal, actually being a small-scale GVAT taxpayer could offer you greater benefits in terms of tax liabilities, lowering your tax liability, than if you are a general taxpayer. Now, important things to keep in mind. 1, the VAT is payable on a monthly basis. 2, there is a VAT software system and printer that needs to be purchased from the Tax Bureau. There are training sessions that are required. There is an application process that is also required once your company is established. The VAT on tangible goods is 17%. On modern services, it's 6%. On logistics services, it's 11%. And according to the final VAT reform, at the end of this presentation, I'll show you the full list of VAT rates that are applicable depending on the industry and sector that you're in. If you are a small-scale GVAT taxpayer, then on tangible goods and services it's 3%, but keep in mind you cannot offset the input VAT. Now, a key component to when you are establishing your company in China is making sure that you fulfill the criteria in order to be able to apply for the general VAT taxpayer status. Now, on this slide, I'm showing you the criteria as of 6 to 8 months ago. Now, why am I showing you this? Because in some cities in China, the tax authorities still require to see all of these criteria. In Tier 1 cities, the application process has truly been simplified, going from an application process of 2 months down to at least 3 to 5 working days. So it's a fantastic development that's occurred in the Tier 1 cities. And you don't need to have all of these criteria. So the first is having a minimum registered capital of 1 million renminbi. In actuality, because the company law has been updated since 2014, the tax authorities are looking more at the business scale, business volume of your business versus looking at your registered capital amounts. Looking at the sales turnover, or not only looking at the achieved sales turnover, but also looking at the estimated sales turnover, is a requirement by the Tax Bureau in order to fulfill the criteria needed. The 800,000 renminbi as a minimum, this depends on the city that you're located in. It's not a fixed figure. The other key component, and I believe this is a key component and a key criteria all over the country, is the company must be operational. Now, why do I say this? It's because if your tax bureau, which is the bureau in the district where your company is registered with its registered office address, has the resources, your appointed tax officer will come and visit your office during the application of the GVAT. And as a consequence of that, he's going to see whether your company is operational or not. So the concept of setting up your company with a one-person office in a business center may not necessarily work out for you if the tax officer comes and visits, because he will say you are not operational enough based on the achieved sales turnover or estimated sales turnover that you're predicting. And we have had a lot of clients come into this exact type of obstacle because, well, you don't necessarily need to have tremendous manpower to start building your businesses. You need contracts in place and maybe one person on the ground. And this is where the tax bureau, you get into a vicious cycle with the tax bureau where you're complaining and explaining. And this is where usually it's always very good to have a white face of the foreign investor to come meet the tax officer and really explain what you're doing. The fourth criteria, this is a criteria that any company should have, whether you're small scale or general VAT, is you need to have a good sound accounting system. Whether you outsource that to an accounting provider or you do it in-house, you need to have an accounting system, and an accounting system that is approved by the tax authorities. Now, once you have your application completed, you've done your testing, you've bought the software, you have the printer, you've done your training, and you're ready to go. You're ready to sell. The next issue is the purchase of the VAT invoices. And just by the amount of words on this slide, you should realize it is not as easy as one thinks to purchase VAT invoices. And this is where the differences come into play when you are comparing VAT to Europe, to the US, etc. When you have, and I'm going to really just highlight the blue sections, but basically when you have the general VAT taxpayer status, you are able to issue VAT fapiaos. Fapiao, that's a key Chinese word that anybody should learn when they go into China. Now, when you start off your business, you are a peanut in the eyes of the tax bureau. You are small. You are insignificant. And as a consequence to that, your sales achieved or estimated should not really be that large. And as such, they have limited the amount of fapiaos you can purchase, and they have limited the value of each fapiao sheet. So you've got to think of these fapiao sheets and these fapiao invoices, I think of it as gold. It's something that, one, if you purchase it, don't lose it. You have a penalty of up to 10,000 renminbi per sheet if you lose it. You generally need to keep these fapiao sheets in a safe or in a very secure location to make sure there is no loss. And understand that each sheet has a value. Now, a key point you have to all realize is there is a black market in China for the sale and purchase of fapiao sheets. So these are valuable documents that really cannot be lost. And you're going to start off with 25 to 50 sheets. It's a little booklet of 25 sheets or 50 sheets, and each sheet is worth 10,000 renminbi. Now you might say, oh my God, what happens if I have now a transaction of 10 million renminbi? Well, how am I going to issue the VAT fapiaos to my customer? I'm going to look ridiculous in the eyes of my customer. You're not. Every single company in China has to go through this process. So anybody who's done business in China will know that you're going through these issues with the fapiao sheets initially, the value of the sheets, etc., etc., etc. If you have frequent transactions, high value transactions, then you can always make an application to, one, increase the quantity of sheets that you purchase each month, or increase the value of each sheet. Now you can only increase the value from 10,000 to 100,000 if you've had a period of 3 months consecutively, each month having a minimum of 300,000 renminbi in sales. And you can also then increase, actually the 100,000 is the limit, but if you have special transactions that require one fapiao for a large amount, 10 million renminbi let's say, you can apply it also with the tax bureau, with the State Tax Bureau, and you just need to be aware of the length of time it's required to apply for this VAT fapiao amounting to the 10 million renminbi. And obviously with any application there is a series of documentation that needs to be submitted to prove that you have such a transaction that is occurring. So the VAT invoices and the purchase of the VAT invoices, this is something that always boggles any foreign investor's mind because it's something that most people find completely outrageous. But it is the system, it is the way it is, and really to understand the system properly, have that discussion with your tax bureau or your tax officer to discuss how it all works and what documents are needed for these special transactions when you just want to issue one fapiao. Now, one thing to keep in mind, and this is a philosophy I've kept throughout my career in China, is really there are two bureaus you really don't want to mess around with. You want to be as transparent as possible with two bureaus. One is the Labor Bureau in terms of your employees, paying the right salaries, paying the right social insurances, making sure their taxes are paid. And the second is the Tax Bureau. Now, a lot of people come to China and say, oh, well, you know, the Tax Bureau is my enemy. We've got to just give them just the right amount of information so they don't bother us. Actually, if you want to understand how your tax bureau works, how your tax officer thinks, you should be as transparent as possible. You should tell him, these are the transactions I'm planning on doing. This is the estimated value. We've got a budget in place. He will guide you and aid you in the process. You know, his goal is tax revenue. The more transactions you have, that's fantastic for him. He's going to earn more. And with that, he's going to be more on your side. So have open discussions with your tax officer about how to work things out. And if you don't like an answer or you don't agree with a decision he's made, always know that you can go up the hierarchy and make applications further up in the hierarchy within your tax bureau. But this does mean that your tax officer might lose face. And as a consequence to that, a key point in running your business in China and dealing with the tax bureaus is choose your battles with your tax officer. Choose what you want to fight. Make sure that what you fight is something that is critical to your business. Don't fight on the small peanut issues that really don't affect your company in such a big way, because you've got to save those chips really for later on when there is a true battle that you want to fight him for. So understand how the purchase of VAT invoices works, how the VAT fapiaos are issued, because really that is what is important in running your business and a key component to what your customers need when you're selling to them in China. Now, one key point that a lot of my customers forget to do when they create their budgets is that there is a surtax on value-added tax. It's minor, but obviously the more VAT tax liability you have, the greater the surtax is going to be. And these surtaxes should really be taken into consideration when you're creating your budgets. So the surtax is a city construction tax and education tax. It's implemented all over the country. The rates do vary slightly, but not by much. And you just need to keep that in mind again when you're creating your budgets. Now, VAT on trade transactions, this is something, again, most people will think, well, this is rather basic. But for those of you that are new to China, I did want to provide you with a slide in terms of how to calculate your VAT payable. Now, as I mentioned earlier, there is a VAT software system that each company has to purchase and each company has to utilize to calculate the monthly VAT liability. For every import transaction, for every domestic transaction, and for every export transaction, all these transactions need to be recorded within this VAT software system in order to ultimately calculate the VAT payable at the end of each month. So I'm not going to go through the whole trade transaction here. That's not the purpose of today's webinar, but I have left it here so that you can review once this presentation is over. Now, let's begin with the idea of the VAT reform. Prior to 2012, all service companies, service industries, they all were issuing invoices, fapiaos, with business tax, not with value-added tax, which meant actually that service companies, their business tax was actually a cost to them. They had higher tax burdens for the fact that they could not offset the business tax against any costs, any expenses, and as a result of that, all service companies had much higher tax burdens. So in 2012, the Chinese government came out with the initial sectors and industries which would move from business tax to value-added tax. Now, a key issue that arose out of all of this is that the value-added tax was at a much higher rate than the previous business tax, which for the logistics sector actually did cause quite a few problems. For the service sector, the increase wasn't that large. For creative services, accounting companies, law firms, it went from 5 to 6%. Not a dramatic increase. But if you look at the transportation sector, it went from 3 to 11%. So there were some complaints initially. Things have subsided since then. And from 2012 to today, it's moved very smoothly. Now, the biggest question about the VAT reform has been the VAT on the export of modern services. So basically, if you are exporting services, you can apply for VAT refund or a VAT exemption. And I've highlighted here what happened in 2012 and for which sectors this was applicable. Now, one thing that you have to keep in mind is that any time you have a tax policy which says refund or exemption, don't expect the application to be easy. Why? Because the tax bureau wants your tax dollars, right? They want your tax renminbi. That's what they're aiming for. So whenever you are trying to apply for a refund or an exemption, it is an application process that does require approval from your tax officer, and there will be documents that have to be submitted. If the tax officer doesn't agree with those documents, then you will have to provide additional documentation to prove that you are exporting your services. Now, we've come across a lot of cases where companies couldn't provide the appropriate documentation. So it's important to remember, whatever you do in China, make sure you have the proper supporting documentation in terms of contracts, agreements, invoices, so that you can show, even showing diagrams of workflows will aid you in the process of doing these applications for the refund and the exemption. Now, the VAT on the export of modern services, this was the primary list in 2012, and at the end of this webinar I'm going to show you all the additional sectors that have been included under the VAT refund and VAT exemption policy. Now, for those of you that are new to China, have just arrived to China, one of the key points to remember is you have limited cash flow. You have your registered capital, which is aiding you in paying off your expenses, but you might find that it's taken longer than expected to receive payment from your Chinese customers. You might have had a payment term of 90 days, but all of a sudden you're at the 120-day time frame and still there's no payment in sight. Happens, right? And obviously when you are just starting up in the market, this is going to affect you. It's going to affect your cash flow needs. And it will definitely affect the budget that you created. So one thing you need to keep in mind is that when you issue the VAT invoice to your Chinese customer, you can decide at what point you want to issue it. Is it the point prior to payment, or is it at the point once payment is received? Now, why is this critical? It's critical because if you issue the VAT invoice prior to payment from your customer, you are required at the point that the VAT invoice has been issued to declare VAT. That transaction has to go into the software system, and it affects your liability at the end of each month. If you have limited cash flow, you don't want to release tax dollars without having received payment from your customer, particularly in the early days. So a solution to that would be to initially issue a pro forma invoice to your Chinese customer, wait on payment, and upon payment, issue the VAT invoice to your customer. And at that point, because you've received the payment, you have no cash risk because you have the cash and you can pay the taxes without any worries. Now, this is all a negotiation, which is again what a lot of people forget. When you are discussing your contract with your customer in China, it is a negotiation with them and their finance team at what point you issue the VAT invoice. A lot of them might agree that you can issue it once payment is received. So use that to your advantage in the early days of your operation where really you're tight on cash. Now, let's go with the latest reforms. Business tax was completely eliminated on the 1st of May 2016. It was a 5-year project to completely eliminate business tax. It was a rolling system where it started off in Shanghai, moved to other cities, started off in specific sectors, and now business tax no longer exists in China at all. So as of May 1st, 2016, the additional sectors and industries that have now been added inside are the construction industry, postal and telecommunications, real estate, financial services, and anything in the lifestyle sector, so hotels, healthcare, education, entertainment, catering, etc. So these are all the newest industries as of May last year. So what does this mean? How does the VAT reform look today? Well, these are all the sectors that it affects. These are all the modern services it affects. And you can see what the new VAT rates are in terms of that. So this is something that when you are first establishing yourself in China, you are going to have a meeting with your tax officer. You're going to explain to your tax officer what you do. So let's just say for this webinar session, you are an accounting firm. You're coming into China. You just newly established your company. You have a meeting with your tax officer to register yourself, and you're ready to start telling him what transactions are running through the company. So you're an accounting company. You have service agreements with customers that are registered in China, and you are providing these customers with accounting services. Each month or every quarter, you may issue an invoice to these customers, and you will receive payment. Now, according to this table, the VAT rate on those invoices should be 6%. Now, this is where, again, China has differences. Your tax officer might not necessarily agree. That is why take this table with a pinch of salt. This is the guideline. These are general transactions that I've listed here. But for any transaction that you are planning to do, for any contract you have gone into negotiation with, you should really take that to your tax officer, speak to him about it, so that he tells you what is the VAT rate. Now, if you don't agree with the VAT rate, you can tell him that. You can complain. You can say, I want to talk to your supervisor. I want to speak to him because I don't agree with your decision. That is a battle I would fight. But it is important to have that meeting, to have that transparency. Now, if you were listening in on yesterday's webinar presentation from Gilbert, who's the head of tax at CMS, he was mentioning exactly what I'm mentioning now, and I want to re-emphasize that. When you have projects in China and you're trying to avoid permanent establishment, actually the key is being transparent, taking that contract to the tax officer, being as open as possible, saying, look, I don't think I'm going to be subject to PE. This is my contract. This is the proof that I'm not going to be subject to PE. And it's the same for VAT. Take your contract. Tell the tax officer, I believe I will have this tax rate. If he argues with you, then it's a battle to really discuss. But important aspect here is be transparent with him. Don't hide it in the hopes that he will miss it out later on. Trust me, the tax officers today, they have keen eyes now. They have eagle eyes. They are looking at contracts. They're reading through contracts. They are checking things. Why? Because of tax avoidance. They want to make sure every company is paying their taxes. So let me summarize here. This is the table. Take it with a pinch of salt. You're looking at the generalizations of transactions here. If you have something that fits maybe 2 areas or 3 areas, talk to your tax officer at what rate will befall you. Talk to a tax advisor. Get an initial understanding, because you might have a contract which requires VAT on tangible goods and VAT on services. 2 very different tax rates. If you combine the 2 into one, the tax officer might say, well, you know, 17% looks a lot better than the 6%. So I'm going on this contract because you've put everything together. I'm going to tell you that even on the services, you've got to pay 17%. Your customers might not be too happy with that. So understand how to manage these types of agreements, understand the intricacies that are involved, but don't be scared to be transparent with your tax officers. Now, one sector that's really been affected by the transition from the business tax to the VAT system has been the real estate sector. If you were renting commercial property or you're residing in China and you have an apartment, hopefully you're renting an apartment where the landlord gives you a fapiao. There are many instances where they don't. Then you have to understand that the tax rate has changed. Now, previously, the tax rate for real estate, whether you were renting, whether you were purchasing the properties, whatever it might be, was at 5%. This has now increased to 11%. In addition to that, any business activities of service providers within the real estate sector, so this means real estate agents, property managers, surveyors, they all fall under the new VAT system, obviously, and they are also taxed on 11%, which is mind-boggling because actually a real estate agent, it's a service, it's a modern service. You know, you can compare it to the accounting industry or the law industry and you would think, oh, it would be around 6%. No, it's actually 11%. So that's why I'm saying there are a lot of intricacies surrounding, you know, who you are as a company, what services you're providing, and what rate befalls you. So be aware of that in terms of the real estate sector. Now, I talked previously about the VAT refund and the VAT exemption, and this was all based on the export of services. Well, as of Circular 36, they've generalized it now saying cross-border services. So any services that are going from overseas into China or from China to overseas is subject to VAT. Now, they've extended what what services that entails. And on the next slides, I've provided a comprehensive list of services for you to review. I'm not going to go through everything right now because it is really quite extensive, but I want to mention again the following. Anytime you have an exemption or a refund application, please note your tax officer is not going to make your life easy. He's going to make your life difficult because he wants to earn tax revenue. And as a consequence to that, understand, and again this is where transparency comes with your tax officer, understand what documents are needed to submit for the VAT refund, VAT exemption, and you know, if it is a battle worth fighting, fight for it. You know, if you want VAT exemption and you've budgeted that you think you can get it, then fight for it. But make sure you're fighting for it with the right mind frame and that you understand all the criteria and the legislation surrounding it. Now, for those of you online today that have representative offices in China, this is also a big transition that has occurred as of May 1st last year. Now, Circular 36 basically states that a representative office is now defined in the eyes of the tax bureaus as a small-scale VAT taxpayer, and as a result, they have to pay a 3% VAT rate. Now, the key point here that I want to mention based on the clients that we've had is that not all of our rep office clients have transitioned. Some are still paying the so-called business tax. I mean, it was never really called business tax. It was never really called VAT previously. They were paying a tax rate on the deemed profitability of the representative office at approximately a rate of approximately 10% on expenses. Now you're looking at a rate of 3%. But again, you need transparency with your tax officer. I have some clients who have gone through the transition. I have other clients located in the Tier 2 cities of China that have not yet transitioned, primarily because the tax officer is not prepared yet to do the transition, and they've openly said we don't understand the legislation yet, and they still need training for it. You know, when you have this type of transparency, you tend to have very open conversations with your tax officers, and you may still be able to benefit on certain things based on the current situation of them. So again, the importance of having open communication. So please be aware, representative offices are also affected. If you are not aware of this and you haven't transitioned, then don't fear, don't get worried. Basically, your tax officer hasn't informed you to make that transition, but there's no harm in talking to him about it and saying, will it happen, will it not happen, because it will affect your budget at the end of the day. Now, in conclusion, the end is in sight. It's all been transitioned. In some cases, completely. In other cases, you know, the tax officers are taking their time with the transition period. But what measures should you take? What do you need to do in order to understand whether you're ready for having VAT 100% in your life and no more business tax? And I just want to make a key interruption to myself here. A lot of clients today that are reaching out to me, and I mentioned this in the first webinar on Monday, they still are doing a lot of online research. And when they do the online research, they're obviously looking up material that is extremely old, extremely outdated, and is focused on business tax. Please, when you do your research online, there's no problems with doing research online. But if you are doing research online, please make sure that you're reading up-to-date content. You know, my belief is when you're looking at regulations in China, being that a lot of them are updated almost on a daily basis, if not on a weekly basis, you really need to look at content that was at least 2 to 3 months old and not more to really get current information. So be wary of that when you are researching information online. So what measures should you take as a company? Well, in order to assure compliance with the VAT regulations, companies already established in China, especially the ones operating in these new sectors, whether it's construction, real estate, financial, lifestyle, they're all recommended to update the internal financial systems and train the relevant personnel. Obviously, this regulation came out 1st of May 2016. For those of you that are already registered in China, I would have hoped that you would have done that transition internally. If you've not done that so, I assume it's because your tax officers are not ready for you to do it yet, but be prepared, because at any moment he can come to you and say, I want the transition to be done within 20 working days or 30 working days. So the important aspect here is making sure that internally you are prepared for that transition at any point that it occurs. It's obviously important for those that are already established in China to review your business and supply contracts, look at the terms and conditions, look at the fee structures, the pricing conditions, whether anything has to be updated in terms of the tax regulations. For those of you that are new to the Chinese market, make sure that when you are drafting your agreements with your customers, with your suppliers, with whomever it might be, that all the tax implications within it are according to updated regulations. Obviously, it's important to evaluate your internal business processes, evaluate your internal pricing structures, your budgets, your forecasts to make sure that you are ready for the transition that is occurring, and you have all of this in mind. It's really a matter of just being prepared. And last but not least, have no fear in communicating with your tax officer. Do contact him. Talk to him about the implications of the VAT system. Even if you're new in China, talk to him. You know, the more questions you raise, the more interactive your discussion is going to be with your tax officer, and naturally stay up to date. Now that the VAT reform has been completed, there are no further updates to be expected unless, of course, VAT rates change over time, which is absolutely possible. I don't see that happening with the tangible goods rate of 17%, but it definitely could change in terms of modern services. Now, I have seen that questions have come in. I would prefer to answer these questions directly to the attendees, and I will do so after this webinar session because they're very specific questions. And in the meantime, if anybody else does have other questions, please don't hesitate to contact us. You know, part of our service is also that we provide tax advisory, and we would be happy to guide you in terms of contract reviews or even assisting you in discussions with your tax officers. Now, if you enjoyed today's presentation or you've been enjoying the presentations throughout this week, then we do have another 6 webinars that are up and coming. Please do register for them if you haven't done so yet. And last but not least, a little bit of marketing. If you are interested in subscribing to our e-newsletter, which goes out on a weekly basis, it's filled with a bunch of resources, newest legislations and regulations occurring in the 3 jurisdictions that we operate in, then it can be done so on our homepage by simply inserting your email address into the section called ChinaInvest.biz Information Series. I want to thank everyone for their time, and I look forward to seeing you all again very soon. Thank you and goodbye.